This is the All-Star Charts podcast with JC Peretz. Hey guys, today on the podcast, we continue with Crypto Week by bringing back JC's interview with Meltem Demirors at Chart Summit 2021 just last month. When it comes to crypto and DeFi, Meltem is one of JC's all-time favorite sources. This was a fun one. Hope you enjoy.
Hey, Meltem.
Hey, what's up, JC?
What is happening? We're gonna change gears a little bit. We're gonna go from some pretty heavy duty, economic breadth data. I mean, that was outstanding, Willie. We're gonna change gears and mix in a little crypto. What do you think, Willie?
That sounds good to me.
I love it. When I have questions about this stuff, and usually I have more questions than answers about most things in life, but especially Bitcoin and other cryptocurrencies. I mean, I'm going to go to Meltem. I'll look at the charts. I'll analyze the supply and demand. We do that every day. And it's fascinating, but the ins and outs of what's going on behind the scenes, I don't know anything.
Well, JC, I feel like we should tell the story of how you and I first met and became acquainted, because I feel like it's a great sort of opening into what's been going on in my corner of the world where I've been for the last 7 years. So do you want to do the honors?
Yeah, no, I'll definitely do it. Willie, I'm gonna hop you out.
Yep.
I just want to show the deck so people can see what's happening next. Willie, thanks again for doing this. That was awesome.
Yep.
I get to see it all the time, so I'm a little jaded, but yeah, everybody else, I'm sure they appreciated that. So guys, after Meltem, we're gonna talk to Phil Perlman, who's gonna give us some life hacks to put ourselves in a better position to be successful at trading, investing, and really in life. Ryan Dietrich is going to absolutely crush it. I'm going to put the over-under on Dietrich slides at 35. I think he's going to beat it. The over-under is 35 for Ryan Dietrich. We're going to hear from Linzen, so that should be interesting. And we'll segue there, Meltem, because Linzen is, I hate to give Howard Linzen any more credit and get his head any bigger than it already is, but he's the guy. He's why we know each other, right?
Yep, absolutely. So here we were at StockTwit's conference in, I want to say the fall of 2017. And if anyone here has been tracking the crypto space for a while, you'll know that the fall of 2017 was sort of the beginning and peak of ICO mania. I gave a fairly incendiary presentation the opening night of the conference, where I basically laid out my thesis on how crypto would change capital markets, venture capital, et cetera. It's so funny because afterwards we're all sitting around having drinks, and JC told me I was full of shit. Excuse my language. But he was
Did I say that?
You did. You were like, crypto's trash. What you do isn't real. What I do is real. And I was like, JC, you make lines and triangles.
No.
And so we had a very friendly spat. It was very friendly, but it was very fun because here I worked in magical internet money. And you have to remember, this was almost 4 years ago now. JC, you were still very much in the world of equities and commodities, the more traditional assets. But here we are 3 years later, I'm at your conference. So, time is an interesting thing. And the fun thing I always think about is like change is the only constant that we can really rely on when it comes to markets. And crypto is having a moment. History certainly rhymes, but it doesn't repeat. So I'm excited for us to talk about what's happening right now, what's different this time, and what I think the future looks like. There are a lot of topics we can delve into. I'm particularly excited about market microstructure. That's a topic I think about a lot. And then I'd love to tell folks who are tuning in, like areas where I think there's still amazing opportunity for our trades and really interesting sort of opportunities that exist due to structural asymmetries and in particular, like challenges around TradFi interacting with what we're calling DeFi. But yeah, where do you want to take it, GC? How should we get started?
This is fantastic because I love learning about this stuff. To be clear, what I was telling you back then was that it wasn't an asset class with real global market implications. It was like one of those things where if all of the cryptos went to zero, it wouldn't matter because it was such a small market, kind of like some of these SPACs or, these days, it's right. It wasn't like a stocks or a bond market or a currency market. And, there was no real systemic risk for overexposure in that market, right? That's what it was then. So in an institutional world, like any of the traders from the hedge funds or anything like that were asking me about it just because they were messing around in their own personal accounts and stuff like that, not because of what they were doing at work. And what's fascinating now, come full circle, right? We're having this conversation again. That's becoming less and less the case with every day that goes by, rather than these institutions investing in the picks and the axes because the cryptos themselves are too small to dabble into. That's shifting with every day that goes by. So I'm incredibly fascinated to hear what you have to say about all of that and some of the changes there. Cool?
Yeah, so let's just start with like high level picture, right? So CoinShares, what I do in my day-to-day job, we're a digital asset investment firm. This is the second digital asset investment firm I've built. The first one is now the world's largest asset manager in this space. CoinShares is the second largest, but we're on our way to being the largest. We have $5 billion in assets under management in exchange traded products that trade throughout Europe under the XBT provider brand. We've been doing that since 2015. Unlike other products you may see in the US that are issued under a trust structure, our products are fully like ETPs, so they're created and redeemed on a daily basis. There is no premium or discount to NAV. And so, that's an area we're really excited about. For a lot of people, their first touch point with cryptocurrencies, the easiest one, the one that feels like the most comfortable a lot of times, is buying crypto through their brokerage account. So that's what we did. We put a wrapper around Bitcoin. That was our first product, and allowed people to buy it in their brokerage account. One of the interesting things to sort of think about, like back in 2015, trying to connect interactive brokers to crypto trading systems was basically impossible. So in that process, we built a really incredible trading business as well. So CoinShares Capital Markets is our trading arm. We trade about 8 to 10 billion of volume a month. We also provide liquidity and infrastructure to other hedge funds and macro funds who want to be in the space. We provide leverage, and obviously there are a ton of opportunities to do really interesting things in that space as well. And then I run our venture arm, where we're investing in not only the picks and shovels, as you alluded to, JC, and a lot of our investments are in the trading space, in order automation tools, workflow tools, credit management tools, et cetera. And we're also actually investing in the protocols themselves and building some really cool sort of infrastructure around these new financial instruments that I think, again, are so different from other assets. And here's what's really exciting and I think important to frame. Cryptocurrencies, as of today, right, I just checked, $2.3 trillion asset class. Wow. Of that, Bitcoin is 1.4 billion. Pardon, I'm saying trillions. Trillion? I'm confused. Yeah. Trillion. Yes. Oh my God. Wow. Okay. T.
Which is insane to think about.
I mean, honestly,
it's a real asset.
When I started in the crypto space, right, in 2015, I raised money for Digital Currency Group. People wouldn't take meetings with us. Thank God Howard did, right? And Howard's always been, a fan, although also a skeptic. But it's just amazing to see where we've come. And so $2.3 trillion asset class, of that, 55% is still Bitcoin. So in terms of diversification in the asset class, I think one of the big questions we're looking at, and we talk to a lot of institutions about portfolio construction, portfolio diversification. Our research has found in a traditional portfolio, 4% allocation to Bitcoin that is reweighted on a quarterly basis yields optimal risk reward results and offers investors the benefit of diversification while mitigating some of the risk of drawdown. One of the things, JC, that we can definitely talk about a bit is volatility, right? Yeah. Bitcoin does have high volatility. What's interesting is over the last year, again, because other markets became much more volatile, Bitcoin's volatility became less of a concern to investors and allocators, because in a world where everything is batshit crazy, right, Bitcoin all of a sudden doesn't feel so crazy anymore. And in particular, I think in a year where, Tesla posted a 700% gain, Bitcoin posting a 300% gain doesn't feel so out of context anymore. Yeah. So I think as capital markets become more complex and more dynamic and sort of volatile themselves due to some of the changes that you've talked about throughout today, right? And we'll continue to talk about. The crypto asset class, I think, becomes less and less risky and less far-fetched. The other thing I want to talk about is in terms of capital efficiency, right, and opportunities in crypto, there is a really interesting thing that's happening that I just want to frame for people who are watching this. Typically, when I trade at my brokerage, right, let's say I have $1 million of Tesla stock in my Schwab account. If I have $1 million of Tesla stock in my Schwab account, yes, I can get margin against those shares and trade other assets in my Schwab account, but I can't get margin and take that margin somewhere else and trade another asset entirely. In crypto, what we're effectively doing, and this is the premise of Bitcoin that is so exciting to me, we are creating one global 24/7, 365 market where you can trade any asset with anyone, anywhere you want, bilaterally or on a formal venue or through a relay or a messaging board. Trade anything you want with anyone you want, anywhere you want, at any time you want. Margin and clear how you want, settle how you want. You can use an intermediary or settle directly, right? DVP. And this all happens on open source protocols. So basically, we have created a global 24/7, 365 market that operated for the last 7 years entirely out of the legacy financial system. We developed a whole separate capital market over in our little corner of the world. The Bitcoin options market, 2019, $3 trillion of volume. Last year, $20 trillion of volume. This year, we'll probably do $100 trillion in notional volume, right? That's profoundly, profoundly exciting. And I think, again, when you start to interact with these markets and you start to see how interesting markets can become when collateral is highly fluid, and you can securitize any asset and then use it as collateral to obtain more leverage, it starts to create some really interesting new constructions for how we think about capital markets, financial instruments, and just the realm of what's possible. Like, it's mind-blowing. I'll give you one example and then we can move on. So this morning I woke up, I have 100 ETH in my wallet, right? I was like, what am I doing here? I'm not earning yield. I went to a DeFi protocol called Liquidity that I'm an investor in. I deposited my 100 ETH, right? And I got, that's about $250,000. I got about $125,000 of USD back, right? So I use the ETH as collateral to get a loan in effectively cash or something called a stable coin, but it's effectively synthetic dollar. Then I took that synthetic dollar, and by the way, I'm earning yield on that, I'm earning interest. And then I took that synthetic dollar and put it in another protocol that earns me 40% annualized yield. So basically, I've taken a crypto asset that normally would not be a productive asset. I've used it as collateral to get a cash loan. And then I've taken that cash collateral that's existing on the same blockchain network, on the same capital market, and used it to put on another levered position. So to me, right, and I can unwind that anytime I want. I did that this morning at 8 a.m. My bank's not open. I can't get JP Morgan Chase to even send a wire in less than 3 days, right? I did that all this morning at 8 a.m. from the comfort of my own bed. And who knows, maybe, next week on Sunday night at 2 a.m. when I'm having a panic attack about markets, I'll unwind that position. And I'll do it all, again, within the span of a few minutes, with a few clicks, without working through any intermediary, without having to talk to anyone. And so I think this is profoundly, profoundly exciting. We can take that a number of different directions, but it truly is mind-blowing when you start to interact with it.
No, there's absolutely no doubt about it. You made some interesting points that, the market doesn't close. You're not calling some 1-800 number somewhere, and who knows who's answering that phone, right? Jimmy. Yeah, doubt it. It makes a lot of sense. And by the way, I've come to, I don't understand this stuff, half of it, but I understand the ledger. I understand the public ledger. I'm understanding that concept. It's almost like when you go to one of these fancy steakhouses, they bring you the cow's birth certificate, and you could see okay, the cow was born on this ranch, and then they moved them over to that ranch.
Wait, JC, where do you go that you get the cow's birth certificate? I want that. I want a picture of the cow with its cow friends.
Yeah, definitely. There's a place in Vancouver that did it. They did it in Japan at a couple of places. It's how, I don't ask for it. They're like, hey, do you want to see the cow's birth certificate? I'm like, yeah, I guess. But anyway, the point is, it's like a ledger. It's like this cow was born here, then on this date they moved it to there, and then on that date it was moved it to there. So the public ledger, the whole concept of somebody owning, the first ticket of some concert, right? That because you could see the whole, maybe a Picasso painting, right? You could see people owning it over time. It's really, really interesting. I'm fascinated by the whole public ledger aspect of it.
But JC, let's just be really clear. What makes all of this possible is the fact that in crypto land, transactions settle with finality. In our current financial system, right, there are delays in settlement, and they've been built in because historically, right, when we were trading paper, there was a lot of time lag, right? We would execute a trade, but we might not settle for 2 or 3 days. In crypto land, if you and I engage in a transaction, JC, if I send you a Bitcoin, that transaction settles with finality on this public ledger. What that implies from a market's perspective is profound. Because transactions settle with finality, you can engage in transactions that you weren't necessarily able to engage in before and have confidence that those transactions will be programmatically executed by this thing called a smart contract and settled with finality. And that, I think, is something that has never really existed before. It's something that's uniquely enabled by the fact that we have this public ledger. And if we think about it from a systemic risk perspective, I always find it interesting to talk to people from TradFi because they're like, oh my God, it's all going to blow up. Like, this is so risky. And I'm like, actually, here's the interesting thing. There is far less systemic risk in crypto because when a position gets liquidated, it settles with finality and immediately. So from a risk perspective, the amount of risk you can take is inherently limited, right, by the fact that in all of this financing ecosystem, everything is fully collateralized and programmatically executed. So if I hit my margin call and I don't post, right, I get liquidated immediately, and there is no sort of like cascade effect or too big to fail effect. So I think it's really interesting as we look at situations where systemic risk is just completely out of control. Look at Archegos, right? Which happened just 2 weeks ago. Like, the fact that that still happens in this day and age is a clear indication that the existing system has become overly complex, and our ability to manage and mitigate risk in traditional finance, which is so opaque and where positions are abstracted behind layers and layers of intermediaries who don't talk to one another, right? And only 50% of derivatives are even centrally cleared, right? So from like managing a risk book, which is what I used to do before crypto, I managed a $20 billion risk book, right? Trading overnight rates. But it was impossible, right? Unless you were using centrally cleared derivatives to really get a clear understanding of the risk you had and the systemic exposure you had. What's interesting in crypto is it becomes much easier to do that because everything is done on chain using public open code, right, that anyone can go and audit, and you can pull and query that on-chain data and analyze it to understand sort of the structure of the market, where risk is, and ensure, you know, that the positions you're taking are sort of appropriate. You also can't take a lot of leverage either, right? There is no Reg T, like margin account. The cost of borrowing cash is still super expensive. So I think, again, there are all of these really interesting structural implications that make crypto such a fascinating and such a fertile space for capital markets innovation. And again, as someone who comes from the trading side, but grew up in corporate finance and is now trying to build an investment firm that straddles this world of traditional finance that I come from, but sees this enormous potential to build a new type of capital market that's open source software, permissionless, operates 24/7, 365 without intermediaries. It's completely just like so eye-opening when you start to think about what that enables, what becomes possible. And then the last piece I'll throw in, the fact that my assets never have to leave my hands, right? I hold the own keys to my wallets. That has really interesting implications from a taxation and seizure perspective. Obviously, you know, the world is an interesting place right now. The US is implementing very aggressive tax policies. There's talk about wealth taxes and other sort of forms of seizing private wealth and putting it into public hands. You know, I think there are some interesting implications there in terms of financial sovereignty. Again, that's like me being libertarian. I do live in New Hampshire now. Like, I'm a crazy, crazy libertarian. So we won't go there, but it is something interesting. And I think important for people to think about, especially financial firms, especially institutions. And then as we see capital shifting, right, from high tax jurisdictions like New York down to Florida and potentially even offshore, I think those implications just become more and more important.
Listen, I think it's fantastic. I love it all. You know, I feel like some people are just like, this is so complicated that I can't, right? And to me, the more complicated it is, Straza said it the other day too. I'm like, yo, what are you looking forward to the most for the Chart Summit? He's like, honestly, I want to hear what Meltem has to say. And I started thinking about it. I'm like, yeah, I actually totally agree. This is great. I love understanding, especially from your perspective. You know, that's why I reached out to you specifically, because I want to hear your thoughts. You were right. Listen, you were right. I remember Brian Lund brought it up the other day. He's like, Meltem was up there saying how she was putting 90% of her whole life savings and 90% allocation to Bitcoin. And Brian was like, and I told her it was stupid. And now who's the stupid one?
It's so funny. I was out to dinner the other night and Howard called my friend that I was with. And I was like, let me talk to Howard for a second. I was like, Howard, how are you doing? Did you put your net worth into Bitcoin? Because I remember at that conference, I told everyone, like, look, I'm all in on crypto. Yeah. I'm, I don't have any cash in my bank account. I'm cash poor. Why would I hold a rapidly devaluing asset when I can hold the world's most scarce asset, i.e. Bitcoin, right? So we had this fun phone conversation. Howard was like, God damn it, Meltem. So look, it's not for everyone. I'm certainly not sitting here advocating everyone to go home right now, like sell their house, sell their car, and put all their money into crypto. But I do think at this stage, it is irresponsible for investors to not at least consider Bitcoin and the broader slate of cryptocurrencies. And the fact is, today it is so easy to access Bitcoin. You can do it through Cash App or Robinhood or Coinbase or Gemini. You can do it through a structured product like our product XDT provider, some of the Canadian Bitcoin ETFs like 3IQ. You can do it through the Grayscale Trust, which is trading at a 20% discount right now to NAV. Good opportunity, I think. There are all of these different ways that you can access this asset class. And I think there is literally zero fucking excuse for any person to not have exposure to it. Because if you go online, all of the conversation in crypto happens on Twitter in the public eye, right? There is no possible way that someone who wants to get educated and wants to get exposed can't self-serve today. And I get frustrated because people will email me or text me or DM me and they'll be like, hey, like, do you have 30 minutes for me to pick your brain about crypto? I'm like, I don't, because you can learn yourself. Like, that's the beauty of what's happening across markets right now. And JC, like, you've done such an amazing job at that with your community at Allstarcharts. Everything's out there. People can learn, and there's a ton of really amazing content and research being published for free by incredibly brilliant people. It's just getting the gumption and growing, the balls to actually jump in and do it. And like, it's not easy. It takes courage. But once you do it, right, that first step's always the hardest. I just think it's such an interesting area of markets. And it's so intellectually stimulating. Like, I'd love to hear from you, since you've become a crypto maniac, have you gone down the rabbit hole? Are you spending a lot more time on this asset class now?
Well, I mean, we've been covering it pretty actively since like 2016, early 2016, but purely from a technical perspective. And back then, only Bitcoin, right? So then Ethereum came along, and then ultimately we've added, the Polkadot, and we look at some other currencies as well, but strictly technical. So I would say we were pretty early, particularly from the technical community, professional technical community anyway. I think we were early on the analysis in the Bitcoin. So I guess we got that right. We were bullish from the beginning, right? One thing that I have noticed most certainly is that, these cryptocurrencies, the technical analysis that we do, the analysis of supply and demand, is as clean and pure as I have ever seen any asset class ever. Prior to Bitcoin, I would argue maybe gold is the one that trades the cleanest technically, but not, relatively speaking, compared to Ethereum, and not just Bitcoin and Ethereum, the other ones too. These Fibonacci extensions, I mean, I'm wearing the shirt for a reason. These Fibonacci extensions line up. And these extensions were drawn years ago, and the Bitcoin market hits those levels and retreats. I mean, it's really, really fascinating, Meltem.
I fully agree. I'm not an expert in technical analysis, but what I will say is this. I think we have just a few minutes left. So maybe I can just paint a picture of where I think we're going. Yeah?
Paint it.
All right, let's do it. I'm feeling creative. I've got my lady astronaut here with me. We're going to the moon, maybe. Look, I think there's this really interesting thing that's happening in our world, and it's this. The internet fundamentally changed information and communication, right? And that was a profound paradigm shift, and trillions of dollars of value were created as a result of that shift. And it wasn't always directly in internet companies themselves, right? That value creation also happened in a lot of other places. I think what is happening with crypto today is similar to what happened with the internet, but it's poised to be so much larger. We are attempting to do something that has never been done before. And that is the separation of money and state. Allow me to extrapolate a bit. We live in a multipolar currency world. US dollar hegemony did not end last year or this year. Really, it ended probably about a decade ago, right? And I think what we're seeing now is the rise of a multipolar currency world. And we see this, right, in the US bond and treasury market. We see this in rate markets. We see this with a rapid decline, right, of American soft and hard power. And what I think is really interesting is in this new multipolar world we live in, a lot of people just think of the nation states as actors, right? Obviously, China is probably, the rising hegemon that most people think of. Maybe Europe has a fighting chance, but I think that's like kind of a lost cause. And maybe there are other EM countries like India who are poised to occupy one of those pole positions. But what people forget is there is another force in our world that's emerging, and that's extremely powerful. And that's communities of people. And Bitcoin at its core is a community of tens of millions, if not hundreds of millions of people around the world who have made something, i.e. Bitcoin, magical internet money, have made it into an economic reality. It is now a major asset class and an economic tour de force. And this has all happened with open source code, with privately owned infrastructure, and people building things in this space, right? There's no government, there's no central entity, there's not even a coordinating body, right? There are no spokespeople, there's no IR department, there's no marketing team. It's literally the power of people that has taken Bitcoin and brought it to the point it's at. We're also seeing this, by the way, in the retail trading community. Like, look at GameStop, look at what's happening with Doge, right? This is groups of people organizing online around a narrative and using that narrative to bring about new economic realities. This is really fucking powerful. And I think it's something we don't appreciate enough. Like, people have more power than institutions. And as our institutions around the world continue to become weaker and weaker and grasp at the straws of power and control, people become more and more powerful. I think Bitcoin is the first of many such communities that will emerge, right? And we'll see others. Some of these metaverses and like games that people hang out in have massive online communities where people spend more time in that digital world than they do in the physical world. So I think like if I can leave people with one message and one takeaway is, as we look at markets and how markets are evolving, where I gravitate to, what I'm interested in is where people are gravitating to. At the end of the day, all money, all value is collective fiction. And collective fiction, right, is driven by mythology. It's symbols, it's icons, it's memes, it's language, but it's a hearts and minds battle. If we look at the battle of hearts and minds that is unfolding now, do you want to put your bet on the dollar and what we're seeing unfold, like the clown car that is Washington, D.C.? Or do you want to put your bet on the brightest, most passionate, brilliant people you know who are all working together online to build something new and interesting? I made my choice 7 years ago. I've never looked back, but I think to so many people, that choice is just becoming clearer and clearer. And for the first time, right, it used to be exit or voice. You didn't really have a choice to exit. For the first time, you can exit. And we're seeing this in Turkey. We're seeing this in Venezuela. We're seeing this in Argentina. We're seeing this in the Philippines. Like all over the world, people are learning they have choice and they're making a choice with their money. So I think this is really interesting, super powerful. So hopefully that's inspiring, not to get too political at the Chart Summit, which is about charting. But
listen, Meltem, you earned it, baby. You tell it like it is. Whatever you think, whatever's on that mind, I want to hear. I don't care. You kidding me? There's no filters here at Chart Summit. You tell it like it is. And you're dropping some serious knowledge.
I have no filter. My greatest strength, but also my greatest flaw. So thank you.
I want to touch on something you mentioned. You talked about, the fact that people are getting more and more power. I mean, this revolution, we're seeing it all over the place. Certainly, this is Exhibit A in the cryptocurrency space. But, in our world, we see the data. We get access to data that people never had before. Since the beginning of time, the people with the access, the power, the information, right? They were only the most wealthiest, right? They were the most wealthy. 99% of the world never got access to this information and data. That's no longer the case, right? We got the same data as everybody else, pretty much, and it truly, truly is a revolution, in many, many areas. And all the things that you're saying, are incredibly inspiring. People listening out there, going out and doing. It's the only way you're going to learn, right? You got to go out and do it. Go buy some of this stuff. Open up a wallet. Go do it.
And JC, the last thing I'll just say, right? I used to go ask institutions for money. I'm done with that. I am becoming an institution myself, right? And that's what I think is so exciting. Like, power to the people. It's a brave new world. That is for sure. There is a lot of uncertainty. There's a lot of gray area. But again, I think this asset class truly is a once in a lifetime opportunity for investors. I think we are just getting started. It's cyclical. It's volatile. It's not for the faint of heart, not for paper hands. Gotta have diamond hands and hodl. But if you are interested and you are willing and you put in some work, I think it's such a rewarding asset class and such a rewarding community to be a part of. My DMs are open on Twitter. Always happy to trade notes with folks. I tweet a lot of bullshit, but I also tweet a lot about crypto and markets and try to drop some knowledge. So if people are interested in engaging there and continuing the conversation, you are most welcome.
Meltem, you're so awesome. I really, truly do appreciate it. I'm not just saying that. We were really looking forward to this, and you brought it. You exceeded expectations. You killed it. I
try. Well, I'm looking forward to seeing the rest of the day. There's so much great content, so much great knowledge. And as you said, JC, the amazing thing is 5 years ago, you would have had to pay $10,000, right, to get this quality of content and research. And I love that it's free, it's available and accessible to anyone who's willing to spend a few hours of their Saturday tuning into this broadcast. So it's awesome.
Yeah, and thank you for taking your time, and all the guests out there. I'm gonna show the schedule for those of you wondering, and I'm gonna bring in Phil Perlman. Hang in there, Meltem, for just a minute. Perlman, come on in. You feel free to share your deck as well. And for those of you wondering, Phil Perlman is coming on now. He's going to talk about some life hacks to be more prepared, to be a trader, an investor, live a better life. Then Dietrich is going to, the over-under on Dietrich charts is 35, and I think he's going to exceed it.
I'm taking the over.
You're going to take the over on Dietrich?
I'm taking the over. I say he hits 40.
Perlman, you know Meltem, right?
I don't believe we met. But
I don't think we've met. Nice to meet you, Phil. I'm looking forward to learning from you.
Total pleasure.
You're both a couple of crypto punks, the two of you. You are.
Everyone's a crypto punk, though. Anyone and everyone's welcome. Please come and join us.
I love it. Meltem, thank you so much. I really appreciate you being here. You're the best. Keep up the good work. You're killing it.
You're the best, JC.
You're killing it, Meltem. Thank you.
That's our episode. We hope you enjoyed that. If you want to catch the rest of the Chart Summit presentations, just visit chartsummit.com. Big shout out to Meltem Demirors for joining us at Chart Summit 2021. Most of the presentations were loaded with charts, so this was a fun chat to really break up the day. Head over to chartsummit.com to watch all of the chart presentations, and we'll see you next time.